What is going on, investors? My name is Emmanuel, and in this video I'm going to share with you 3 stocks that I bought this week. 2 are growth stocks and the third is actually a dividend paying company. I know we haven't spoken about dividends on my channel in a long time, but I do have my dividends portfolio running in the background, and recently I saw some weakness in my favorite dividend payer, so I decided to top up on that. So I'm going to share all 3 of these companies in this video today, but before we dive into it, make sure you smash that like button, and if you're new to the channel, hit the subscribe button and the notification bell to stay up to date with all of my latest video content. With that said, let's dive into it. Don't you just hate it when you buy a stock, okay? You buy a company that you intend to hold long term, but you want the price to go lower. So you decide that you're going to make a starter position, and if the price declines lower, then you add and then you build. But don't you just hate it when you take that starter position and the stock just goes, the stock just flies? It's incredibly frustrating, and that's exactly what happened with Alibaba last week. Now, if you recall, last week I informed you of 2 stocks that I was looking into closely. One was Alibaba and the other was Beyond Meat. Well, I decided that I liked the look of Alibaba. It was too juicy, and I alerted my Discord that I'd started an Alibaba position. And this was my alert to my Discord. I said I started a new position in BABA, BABA, once again at $215.97. Only picked up 30 shares as a starter. We'll be looking to add if we drop sub $200. So that was my alert to my Discord at $215.97. But look at where we are. Today we actually tested 230. Yeah, we broke $230. So since the buy alert, the stock has now risen up 6%, and we tested highs of $230 today. Now, I am hoping Alibaba drops lower because I am so bullish on this company. I've already given my buy thesis in my previous video, and I think this is a solid company trading at an incredible discount. Now, if you remember, Analyst had price alerts at $270 a share. So there's still a long way to go from where we are right now. So if I don't see any signs of weakness in the stock, maybe there's a lot more buyers than sellers, then I might have to average up my position. I hate averaging up. I absolutely hate averaging up. But if I have to, it is a long-term hold for me, so it might be worth averaging up because I still think the price is trading at a crazy discount right now. So my next purchase was, of course, TTCF, TTCF. I think around $20 is just too attractive to ignore. And investors, I just cannot stop buying this stock. I'll tell you in my Discord that I need some help, I think, because I just keep on buying this stock. And you know what? I've got a detailed TTCF update video coming, but I want to draw your attention to Analyst Day. So this is a presentation that was presented to investors on Analyst Day. That was around December 15th last year. Now, let me remind you. So at this stage, right, in December, the company had introduced themselves to all of these retailers in the last 60 days. Okay, now this is key because you had the likes of Target, you had the likes of Whole Foods, you had the likes of 7-Eleven, we had Kroger, we had Stop and Shop, all of the major national retailers, especially from a food point of view. You know, we had introduced ourselves by that point. Now, we already know the news of Whole Foods. You know, we got the news a couple of weeks ago that TTCF will now be available on Whole Foods nationwide. Okay. We already got the news about Target, so we know about Target, but there's been some major developments with regards to Kroger, which I will go into depth in another video. And we also have some updates with regards to their position with Stop and Shop. And I think this has relatively gone unnoticed amongst shareholders. So in that video, I will be going into much detail with regards to Kroger and where we are with Stop and Shop. But either way, when this news of Kroger came out, I just got too excited and I picked up an additional, let's bring it up here. I picked up an additional 200 shares. I just can't seem to help myself. I mean, the valuations at what, 1.6 billion is our market cap with our current expansion at the moment. Unbelievable. It was too irresistible for me, and I decided to add another 200 shares. And you know, we're well over 3,000 shares in TTCF right now. If anything, we're now on our way to 4,000 shares in this company. And this is a company that I plan to just hold on. Like, you know, we talk about long term being 3 to 5 years, but to be honest, you know, I don't have any intentions of selling this stock within the next 5, within the next 10 years, because there's so much exciting development still on the way with this company. I mean, mean, taking you back again to the slideshow from Analyst Day, remember, this is our plan, okay? So we now know from the acquisition of Foods of New Mexico, this is how we're going to get into the food service side of the business. We still have the grocery aisle that we need to expand into. And think about it, we're already in Walmart, we're already in Sam's Club, we're already in bed with Target, we have Kroger on board now. I mean, getting into the grocery aisles is going to be an absolute piece of cake, okay? It's going to be a piece of cake. Internationally, I don't know where we are in terms of other countries, but I know in the UK, we launched our third product recently. So again, that's very exciting. We need to get into convenience stores and also licensing. So there is just so much for us to achieve as a company. It's crazy, okay? And this is why I said I can't see myself selling shares anytime soon. We just started in the food service, and that's going to expand, and we still have all of this to look forward to. Insane. So you can understand what Stephanie means when she said there's a clear path to 1 billion, because think about it, if we could dominate in the food service, grocery aisle and international, that alone should be enough to get us to $1 billion, let alone licensing and then convenience stores and then other plans that Sam or the team might have to expand and grow the company even more. There's just so much runway for growth in this company, and it's just incredible to be a part of, and I'm very, very excited. Now, what was the dividend stock that I bought recently? And the answer is Medical Properties Trust. Ticker symbol is MPW. So currently this is the largest company in my dividends portfolio, and at the moment they're paying a dividend of 5.46%. Okay, that's their dividend yield. They're sitting on a PE ratio of 21.66 with an earnings per share of 0.94. So straight off the bat, you can see they have a price to sales ratio of 8.96, which is very, very good, and a price to book of 1.47. Now this is the kicker. Take a look at their operating margins. 67.33%. Unreal, okay, with a profit margin of 38.34%, and their dividend history is equally impressive. If you take a look at their dividend history, they have been growing their dividends very, very steadily. So as you can see, in 2011 they were paying a quarterly dividends of 20 cents a share, and a couple of years later they upped it to 22 cents a share, and then the following year it was 23 cents a share, and then 24 cents a share back in 2017. And fast forward to 2021, they're now paying a quarterly dividends of 28 cents a share. And if you look at the consistency grade on Seeking Alpha, they have a grade A rating from a consecutive years of dividends growth. So this is a company that have been growing their dividends very, very well. And over a 15-year period, they have a B- rating, okay? And that's to do with that period between 2011, 2012, where they didn't really see any increases, and then the increases began in 2013/2014. Ever since then, they've been growing it quite consistently. And with the recent news that came out regarding this company, they are going to continue to grow their dividends for many years to come. Now, here is the news that got me excited about Medical Properties Trust. If you're not familiar with Medical Properties Trust, they are a REIT, okay? So they're a real estate investment trust, but they deal predominantly with hospitals. So their portfolio is pretty much made up of hospitals, and the large part of their portfolio is made up of acute hospitals, and they have a portfolio of over 400 properties in their arsenal. Now, this news came out just last week that Medical Properties Trust is to acquire 5 general acute hospitals in South Florida for $900 million. Insane. So the company mentioned that they expect to initially fund the total cash consideration using the cash on hand, because they have a really impressive balance sheet for a REIT, as well as funds from the closing of binding property sales, proceeds from loan repayments, among others. Okay, so this acquisition, I believe, will put Medical Properties in a position where they can continue to grow their dividends, and of course shareholders will be able to benefit from that high dividend yield, and as well as an appreciation in the share price. So these are the companies that I've been buying recently. Let me know in the comment section what you have been buying. Thank you so much for watching, and I'll catch you in the next one. Peace.